Kitco Mining special coverage of PDAC is brought to you by Gold Mining, Uranium Energy Corps, and Uranium Royalty Corps.
Hey everyone, welcome back to Kitco Mining. I'm Jerry Saffron. We are here at PDAC 2025. It's our 15th year covering this amazing conference. Now we got a special segment in the books today. It's called Tinder for Gold Mergers, and we're swiping through potential gold company hookups to see which mergers are a match made in mining heaven and which ones are just fool's gold. Now joining me today are gold sector matchmakers. Of course, you know him well. Adrian Day is the CEO and chairman of Adrian Day Asset Management. Good to see you, buddy.
Thank you.
And our very own Paul Harris, of course. He's our senior mining editor and the anchor here at Kitco. I just want to say, here's how it works. I'll present a potential gold company merger, and our matchmakers will decide if it's a swipe right, which is, of course, I like it, or a swipe left, which is a no. So let's get into it. Paul, just before coming to air, you put out a story 2 weeks ago with the Mining Journal. It was titled M&A Tinder, Swiping Right on Gold, and two companies that you mentioned then right after decided to do a merger. Of course, I'm talking about Equinox Gold. They agreed to acquire Calibre Mining Corp for a $2.6 billion all-stock deal. That puts them up to 950,000 ounces in 2025. What do we think, guys? What do we think about the deal?
Well, the genesis of the article was I was thinking of, what can I put out ahead of the BMO Metals and Mining Conference in February, which we covered on Kitco Mining last week. And I thought, Newmont's completed its divestiture of 6 mines, and so there's a lot of companies that were frustrated and didn't end up with a mine, so presumably there's going to be a lot of interest in M&A going forward through this year. So I thought, well, the mid-tier gold sector, companies with a market cap between 1 and 4 billion, there's about 15 or 16 of those. There seems to be a lot of potential there, and getting scale is important. And that's exactly what this deal with Calibre and Equinox does. It will give the resulting company, about a $7 to $8 billion market capitalization, which will separate it from the herd. So from that point of view, I think it's a very positive movement.
Yeah, all stock, a big one. And they got, I think, $1.5 billion in debt too. So there's a little bit of talk around that. What are your thoughts?
Yeah, no, I thought it was a good deal. And of course, Ross Beatty has said, he wants to get to $1 million producers. So they're almost there. If Castle Mountain comes on, if Castle Mountain comes on and they keep Los Filos, they'll almost be there. Yeah. But I agreed completely with Paul. Most of the mergers, or at least there's a lot of potential for mergers among these mid-tiers. That's where I really see the potential. More than among the big ones or big ones buying smaller ones. I see the potential in the mid-tiers moving.
Well, we're finally seeing some nice cash flow on the gold side too. But I got to ask you, this deal hasn't closed. We still got a few months before it does. Torex, New Gold. Is there any companies that you thought might have been a better acquisition?
Well, for me, one of the key things that Equinox is touting, and we had Ross Beatty on, and he was talking about it. That video is obviously on our YouTube channel. He was talking about that this deal brings together 2 large Canadian assets, Greenstone, which is Equinox recently brought into production, and the Valentine deposit in Newfoundland and Labrador, which Calibre Mining is getting very close to completing the construction of. If you're just looking at big Canadian gold, another potential deal would have been Equinox and New Gold, which has a big mine, Rainy River in Ontario, and another big mine in British Columbia, New Afton, which has the added advantage of having some copper with it as well.
Yeah, I find it fascinating. Ross, he's quite a good deal maker, huh?
Oh yeah. But I'm not sure that he wants to go after Torex. I suspect he's probably had enough of Mexico for a little while, or particularly he's had enough of Guerrero State for a little while. So I don't see the Torex happening anytime soon, frankly.
Let's talk about Wesdome. Calibre is also in one of those categories. We know that this acquisition is happening. Wesdome's an interesting one. Unpack that a little bit. You see some value there.
Yes, Wesdome's got a couple of producing assets, and it's a less well-known company in many ways, but its market cap has risen over the past couple of years up to about $2 billion. Like Calibre, I think they're both very well-run companies. They both execute very well, and so I thought there could be some sort of good synergies there, and obviously both of them are in Eastern Canada.
What do you think? What do you think about that?
No, I think you make logical sense, but I think the Equinox Calibre is going to close. Yeah. So I mean, it's a moot point at this stage.
Would West Dome? I mean, the share count would. You're seeing these dilution events take place. This was an interesting one because it was a 1-for-1 stock deal, and it didn't seem to dilute it very much.
Correct.
Could that be the case if West Dome goes after someone?
Oh, if someone else tries to go into Calibre, there's plenty of opportunity, plenty of room for a premium.
Yeah.
But of course, those two teams, the Equinox team and the Calibre team, they're friends, and that means something in the business. I don't suggest that Ross Beatty would do the wrong thing for shareholders, or Calibre would do the wrong thing for shareholders. But when you know people and you've known them a long time, that counts for something.
Yeah.
I think one aspect there, sort of riffing off of Adrian, M&A transactions, one of the things that are usually touted are the synergies, the operational synergies, and that's perhaps one area where Equinox and Calibre deal falls down because they're geographically separated from each other. There's not really any chance for operational synergies and cost saving other than head office stuff.
Yeah. I mean, you brought up New Gold. You said that maybe Ross wouldn't want to really touch that Mexican market, or Taurus rather. What would be the ideal? I mean, where is our Mexican market? I mean, we have a president in there. There's a lot of shakeup. We got the tariff talk. Still a safe jurisdiction. Would it be just better to put a couple of those together?
In Mexico? Yeah. I mean, look, I think what's going to happen in Mexico, there's clearly a shift in Mexico. It's improving. But I think it's true to say that the sentiment among most major companies and most intermediate companies remains negative. Yeah. But there's some people who either know it more intimately or perhaps are more adventurous. I think the opportunity for a company to go in and start acquiring some good Mexican assets, producing or non-producing, and acquire them relatively cheaply is probably very compelling. Someone's going to do that sooner or later because the sentiment is shifting.
Well, we've seen a lot of inbound and outbound M&A in Mexico last year with First Majestic Silver buying Gato Silver and Core Mining buying Silvercrest, and more recently Discovery Silver going outbound and buying a mine off the Porcupine mine off Newmont.
Yeah. Do you think these large caps, I mean, they're printing money at this point. Some of the free cash flow they have, they don't even have to go out with their stock and use it as currency. What do you think the play is going to be? I mean, just to keep advancing and just using their cash flow to keep getting larger?
I think all these companies know that it's a cyclical business. Yeah. And they all know, we all think gold's going to be 3,000 soon and then 5,000. But we all know this is a very cyclical business. And, for all the talk about inflation and costs going up over the last 2 years, let's face it, the cost of mining has gone up far, far less than the gold price. So that's something that could change. Even if the gold price remains strong, the oil price could move up a lot, for example. I'm not suggesting that, but it could move up. And so these companies the big companies who are in it for decades, they know it's a cyclical business. I don't think they want to they've got some cash flow. I don't think they necessarily want to just go out and deplete it because it's burning a hole in their pocket.
Yeah, wait for the rainy day.
I think there's, as you mentioned, the gold companies, the big producers are having a bonanza because of the gold price, but that isn't necessarily trickling down to other levels of the business. And so you can perhaps see some sort of valuation leverage of the big companies taking advantage of the smaller companies and picking up.
Particularly add-ons, yeah.
I mean, Equinox got some high costs, though, too. When you look at the margin, I know you've been diving into the all-in sustaining costs of some of these. I mean, I think it's down to $1,200 for Agnico. There's a lot of money here.
It's amazing.
What's your ideal? If you were to look at the big caps right now and a couple of juniors that I haven't brought out here, and I mean, I could name some, right? We got K92, Oceana Gold. We're going to some of those juniors. What's your idea here? Where would you like to see? Who would you like to see join forces?
Oh, that's a very good question. There's a couple of companies. I mean, we mentioned Torex. They've been doing very, very well. Their stock has a lot of value in it. Another junior growing company is Orla Mining. They've done a great job for a number of years. Their stock has always had a much higher valuation relative to similar sized companies. So there's a lot of leverage there. They've got a lot of firepower to do stuff with. They just picked up a mine asset from Newmont. They've got a development project in Nevada. I think they're going to continue to grow and grow. And there's some others. Lundin Gold is, I think pretty much the highest margin gold operation of anywhere, and very high grade. It's making cash like you wouldn't believe, but soon they've got single asset risk, so they need to do something sooner or later.
Do you think the consolidation has taken place? I mean, when we think about juniors, there's so much crap out there, to be honest, but it does feel like there's some of that weakness has been shaken out in this market.
Ooh, I'm not sure about that.
No?
There's still a lot of your word, not mine.
That's a swipe left.
Yeah, swipe left, exactly.
Okay, well, I don't know swipe left or swipe right, because if I do, my fiancée will be very, very annoyed at me.
Yeah, none of us know that.
So I don't know which one's which. I don't want to see much more consolidation among the seniors, to be honest. Now, an Agnico buying an asset that's a good asset adjacent to a mine, yes, of course. Or, Agnico might buy Probe, for example, it's in the same region to get ore for their mill, etc., etc. That's fine. But I don't want to see much more consolidation, because let's face it, we're down to a handful of companies that are, investable size for generalist investors. So I don't want to see it there. Where I really would like to see consolidation, frankly, is among the juniors and the explorations. And by juniors, I don't mean the ones you're talking about, the intermediates. I mean the real juniors, where consolidation and size can really improve the business by cutting those overhead costs. So many companies have, if every company has their own CEO, their own CFA, their own filing fees, et cetera, et cetera, et cetera, even if they're running a perfectly lean business, that's still a lot of the money that they raise is just going to maintain the business.
G&A costs.
So if you could merge a few of these and get some synergy in it, I think that would really help.
Do you got a dream team? Do you got like an ideal that you would love to see come together? You got to give it to us here, Adrian.
No, not really. Well, and what I just said also applies to some of the junior royalties.
Yeah.
I mean, I really think some of those royalties should come together, because the royalty business is a business where bigger really is better, right? Bigger often isn't better. Right. But for junior royalty companies, bigger really is better, because it reduces your cost of capital, which you have to use to go out and make acquisitions to grow the business. So I'd like to see some of those get together, frankly. But we all know the problems. There's a CEO that doesn't want to lose his job, and there's a CEO that always says his stock is undervalued.
Every time.
Every time.
Every deck.
I've only ever met one CEO who said to me, "Yep, I think our stock is fairly valued."
Really?
Yeah.
You won't share it?
Yeah, I will.
Okay, who's that?
Amar Aljondi of Agnico Eagle Mines.
Yeah, no, it makes sense.
Yeah.
Agnico, I mean, what a.
Well, Agnico, I mean, it doesn't surprise me that you say that, because let's face it, Agnico is really a first-class act.
Yeah. Absolutely.
And all the people there are superb.
Sean Boyd, I mean, what he's doing with the Arctic too and the strategy, they're focused on the gold, but they got so much to kind of go there with the Department of Defense they're talking to. I mean, it's interesting.
Well, and it's interesting to me that the best companies are often the people where the CEO has the lowest ego, the least ego.
Hey, that's true. That's it's very rare in the mining community.
I'm not going to say who has the highest ego. We'll just...
Well, let me...
Maybe you'll tell us.
I may infer. And when you, following on your point, Adrian, about you don't see the need for the majors to merge amongst themselves, you mentioned that it may be a good idea or not for Agnico to continue to expand in the Abitibi, in the Val d'Or district, where it has that real strength. Right. But one of the big companies that perhaps...
And a mill with excess capacity, yeah.
Yeah, it's got the Fill the Mill program. But one of the big three that really does need perhaps to do something is Barrick Gold, of course, who's, over the years has gone from the gold company to second place, and now third place, and losing ground.
Well, he insists on no premium mergers, which doesn't always make sense.
What's your advice there? What do you think? What would you like to see?
During a Kitco interview a couple of years ago, I asked Mark Bristow that question. He'd just prepaid down about $500 million of debt, which I think is a good thing. I think it's a great thing for gold companies to pay down debt and get ahead of that curve. And I asked him, said, Mark, with that $500 million, given where the market is at the moment, you could have bought, depending on who you choose, 3 to 5 million development stage juniors with over 10 million ounces of aggregate reserves, advanced stage, development stage. Why not do that? And I'm not sure I can repeat his answer, but it was kind of what you said.
Yeah, it seems like it's maxed out. Well, then we're bringing up those big guys. I mean, Barrick, Newmont, I think Agnico just passed Newmont on the cash flow side, which is quite wild.
And market cap as well.
Market cap too. What about a mega merger then? I mean, if you were to blend in 3 of these guys and make a new Newmont, who's it going to be?
Well, I think there's some opportunity to create another regional powerhouse in sort of Eastern Europe, and there's a couple of companies there. Dundee Precious Metals is there, Centerra Gold, Eldorado Gold. That looks, potentially very attractive. But again, perhaps one of the barriers there was what Adrian referred to as, CEO egos and who's going to end up in the top job and who's going to end up on the board.
Yeah. What do you think about those 3 companies?
You mean in terms of a merger?
In terms of a merger, Centerra, Eldorado, Dundee?
Yeah, I'm not. I don't see that, to be honest.
I mean, what would it be? The pro forma market cap would be about $8 billion, $7.7 billion. But, I mean, how would you integrate them all?
Yeah.
Not sure?
Not sure.
Yeah. So that's a swipe left.
But maybe we'll differ on that.
What do you think?
Well, again, I think it will have a regional presence and it'll be a regional powerhouse. They won't really have any competition in that part of the world. Right. They're all relatively low-cost producers. None of them have excessive debt. None of them have excessive share counts. So I think there are a number of things to like there.
In this unglobalist world that's starting to unwind, where the U.S., Donald Trump says, "Hey, you spend $1 billion here. We're going to open up our permits to you. We're going to fast-track stuff." Where do you think is the most friendly region and jurisdiction right now? I mean, where would you be putting all your money?
No, that's really interesting because there's no question that the ease of getting permits, it's already eased considerably in the US. And the president, are we allowed to say his name? Or we'll get notes at the bottom because you didn't say it properly. No, that was a joke. But the presidents, they've only been in office less than a month. No, just over a month. And already I hear from so many companies that they're getting permits. They've got a much friendlier relationship. I talked to somebody last night at a cocktail party. He said they've been trying to get their permit for over a year. And, a week after Trump came in, they got an inbound call from the regional manager saying, "Hey, you're waiting for your permit. Why didn't you come in? I think we can sort that out." So I think the tone has changed completely. So, that is all very, very positive. And, let's face it, there's also a concern, gosh, do I really want to be a mining company in Mexico? What the blazes is Trump going to do next? Yeah. So, if you're in the US, maybe you're safe. But I think the permitting is a huge thing.
Let me come back at you. I agree with you there, but, Trump seems to give with one hand, but he's going to take it away with the other. Tariffs. He's putting tariffs or wants to put tariffs on steel. Steel is obviously a key input in building a mine, constructing a mine. He wants to put tariffs, or he has put tariffs on China. China's a key source of inputs for running mines. It's a key source of equipment and machinery that mines use. So, yes, you may get your permits, but it does seem, at least in the short term, your cost to build is going to go up considerably.
That could be, yeah.
I wonder about the Canadian market, too. Some of these Canadian miners are getting excited because they're hopeful of change. They're hopeful that people are going to get it back into the ground.
Right. But, the plain fact is that right now it is a lot easier and quicker to get a permit in the US than it is for a similar mine in Canada. So will Canada ease their permitting? That would be good if they did, but...
Any 3 mid-tiers you'd like to see to get together?
Wait a minute, ask him first.
Yeah, the mega merger, you got this, but I guess it's jurisdictional. I just wonder how you'd put 3 together and integrate all of the production.
There's some I'd like to see merged, but I'm not quite sure whom with, to be honest. Yeah. It would be good to see a merge with Oceana. I think B2 is going to continue to grow.
I got another one, the Oceana and K92 here. If they merge their assets in the Philippines, New Zealand, Papua New Guinea, they'd have about 700,000 ounces.
Right, that would be a sort of pivot away from the North America for them. But that would make a lot of sense. Is that a swipe right?
Yeah, I think that's a swipe right. We don't know the rules. Do we?
Well, you're the rule master, but yeah, I think that's a swipe right.
Yeah. What do you think about that acquisition?
Yeah, again, a key thing there would be you'd be creating a sort of a regional powerhouse.
Yeah.
And so presumably that would have certain advantages or efficiencies or what have you.
Well, it would attract certain investors. Yeah, no, that would make a lot of sense. But I think B2 is going to be a player.
Who are they? Give me more.
With more Canadian.
B2, because of the cost overrun issues at Goose, they're taking a big hit. They've had to cut their dividend because of that. Do you see B2 as being vulnerable from an external bid?
I wouldn't want to go up to Clive Johnson and say, hey, we're going to do a hostile.
Maybe not.
Maybe not.
He can get quite
hey, Clive, I like you. No, actually, I've known Clive for, believe it or not, over 40 years. So, yeah.
Well, you're onto something. Give us an exclusive here, then.
No. No, I would see more once Goose Bay is up and running and they've sort of, as it were, repaired the balance sheet, that convertible or whatever it was they just did, really puts them in a good financial state. But once Goose Bay is up and running, I would expect B2 to actually look for another acquisition in Canada, though, not in Mali.
Interesting. We talk a lot about mergers and acquisitions. We always say, are we on the forefront of a new M&A, sprint here? But could some of this cash flow just go this year more towards, as opposed to acquisitions, paying off debt and getting some dividends out to shareholders?
Yeah, but the debt's already pretty good. You look at the XAU. Now, the XAU, of course, includes the big royalties, but the XAU is net cash positive in aggregate. And you look at the big companies like Agnico and Barrick, and most of them have pretty good balance sheets. I mean, I'm always in favor of paying down debt when you can, because it gives you, if nothing else, it gives you maneuverability, flexibility to take on debt when you need it. So it's always a great idea to pay off debt, and I always want companies to pay off debt before they increase their dividend. I mean, let's face it, who buys a gold mining stock for a 1% dividend? Nobody does. So increasing it from, 0.8 to 0.9, who cares? Yeah. So pay down debt, always.
Well, that's the question I have for you, actually, Adrian. I agree with you that over the recent years, companies have done a good job paying down debt, getting their balance sheets into better shape. And with the cash bonanza that's coming in, we saw in the 2024 financials, rather than increasing dividends or changing their dividend policies perhaps to a percentage of free cash flow, companies seem to be more intent on buying back their stock.
Yeah, well, I would always say, well, first of all, advancing the business should be number one. Right. Number two should be paying down debt. And then if you have excess debt cash after that, it depends on the share price, of course, but I'd prefer to buy back shares and pay dividends, because, when you pay a dividend, I mean, I love dividends in everything except gold mining, because it's a capital-intensive business where companies will need cash. So what on earth is the point of increasing your dividend, as I say, from 0.8 to 0.9? Who dances in the street and opens their champagne bottles because they're getting an extra 0.1%? And then in a year's time, you go out and borrow money to make an acquisition. Wouldn't it have been better to have the money on your balance sheet?
Well, that begs the question then, for 1% yield, why bother paying dividends?
Well, they have to pay some things. There's a lot of pension funds in the US that they're only allowed to buy stocks that pay a dividend. But it can be 0.1%. It can be anything.
There, they got some institutions.
Yeah.
Tell me about the super like. I mean, I know you don't know Tinder, Adrian. We talked about this, but there is that thing which is the super like. It's the wild card. You press it, and it instantly makes them join forces.
Well, I truly have not heard of that.
Who is? Yeah. Well, I've done some Googling. I did some research. Who would be the super like? What's your two ideal candidates? Who would you like to see join forces if it was in an ideal situation?
I hadn't prepared anything for this, but one that I think could be really good. Put together two of the lowest cost gold producers in the world, and that is Lundin Gold and Dundee Precious Metals.
Yeah. Wow. That'd be interesting. Thoughts? Super leg.
Yeah. Super leg.
Super leg.
Super lay.
No, not super. It's a super like, not a super leg.
Oh, I thought it was LEG. Sorry.
It was LAY.
This.
I mean, I like the idea of what you said or something like that.
Right.
Two companies like that. Yeah.
Any that you would name that you see?
Can't think of any right off the top of my head.
I mean, it's funny because the management company, you see this with Ross and the Equinox development. I mean, they've been talking about that acquisition for a long time behind doors. So these discussions are happening. I just wonder what numbers are they running the numbers at? They're not doing it at this level.
Well, it changes all the time, doesn't it? And that's part of a problem.
Gentlemen, this has been fun. Let's do it again.
Okay.
Paul Harris, of course, senior editor of mining here at Kitco Mining, and of course our anchor, and Adrian Day, CEO of Adrian Day Management. We'll get the kinks out of this one. No super lay. It'll be a super like next time. And in the meantime, make sure you stay tuned here at the PDAC coverage for 2025. We're going to have some great guests coming up all week long. Hit the subscribe button. We'll see you next time.
Kitco Mining special coverage of PDAC is brought to you by Gold Mining, Uranium Energy Corps, and Uranium Royalty Corps.